Here we are, gentlemen. These contracts were 810 on the close. It's a LNKD 222 weekly 155 call. What we're doing is 405 is a low. That entry on two contracts was 460 on very light volume. The contracts, which here is the weekly call chart of the 155. The value of these highs up here were $8.25 the other day. We bought them where the close was at 460, the low is 405 down here in the info panel, and they opened at $5.80 is where these contracts had originally opened. And that's here in the volume panel down right here on 219 and the date. Open 580, 405 is a low. They had a close. We put the print right there at 460. We bought wholesale, but the volume is light because LinkedIn in itself on a 3-minute chart, unlike any bottom, is a weak bottom. We're at 24 IR. We went down 1.18. And each teeny value 1/16 today is narrow range. It's only 17 cents. So it's contracted, and today was the first major reversal that starts at the 160 area. However, you can clearly see 161.20 was the high, and they started it from the overbought level of 162.66 on the close. That's a gap down. And we're purchasing the contracts down here. They've never were this low before. We're at 460. We're not 405. And we only took a lower volume, but we're buying that call down there at the very lowest capital dollar risk entry. That's what people need to learn. What being here is about is that you get these low wholesale bids from the close based on what the chart will do at a bottom. But the bottom is still weak. But it will be confirmed as we sold all the way down from its an exhaustion intraday morning price highs alert. It's the first day that we've really had, these little pullbacks. They start like that, but really since its earnings report, and we're just looking now over the last few days, this reversal right here is the kind we always look for in price exhaustion. Here's the 162.80. Here's that gap down. Here's that gap down. We come down. Here's that pop in volatility, but here's the real drop off right here. That bottom is still at risk. However, it's in a very extreme bull run, and it's its first good major reversal from an intraday perspective, or an intraday morning in price range, is that we had a total descending value, and that the short side is in play, and that the next limit order on these contracts go at $2.80. So that would be the next limit order of two contracts, would be $2.80 alert at 8:51 a.m. Pacific Standard Time, 2/19/2012, 3.5 minutes into the observation, understanding how to buy wholesale versus the retail value. And look at, that's the update on the LinkedIn. Straight down, they took all the call premium out. So it gave us the opportunity, being who we are, is to go over here, and we never had a chance to buy these calls this low before. No, we did not, because they went all the way up here, 8.25, and our entry's at 460 right here. So do the math. 825 minus 460, that is the dollars that we saved. Yes, they can always go to those lower bids, but we won't put on real big volume until we get other confirmation, and we will alert everyone in the market maker pit as to when the volume would increase. We are buying wholesale. These contracts today is cheaper than the whole weekly process. There's only 3 days of data here of prices, but it doesn't matter. At least we're wholesale on the first pass.